Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at FutureFuel Corporation, ticker FF. This was a requested stock, so we're going to take a look at it and see what's going on here. Is it a potential buy, or is it a stock to avoid? So when I was looking over the stock, there are no analysts for it, so we are kind of on our own for the numbers, and I don't really like what I'm seeing. So we just kind of have to project the revenues. The rate of growth that they had seen, they did grow from 205 to 396. So at that rate, they could go as high as 493 this year. Earnings, they've been on a consistent decline. 2.02, 1.06, 60, 35. They came in over 40 cents already with the first quarter, which they could wipe out with some negative quarters. So there's no guarantee. But assuming that they can keep up with what they've been producing recently, they could come in as high as the $1.20s, and we'd hope for at least some growth the following year, getting into the 130s. So for the revenues, we see decent growth. Earnings per share, they've been losing year over year on earnings per share. So that is not a good sign. And we see that their expenses as a portion of revenue have been climbing. So it's one of those cases where it looks like the expenses are kind of getting out of hand for them. Share count has been growing, so that's the third red flag here. Free cash flow yield is okay. It's decent. The earnings yield had been consistently dropping. So if they come in line with something from last year, that'd be another red flag. If they can come in with something more like the $1.20, they'd be looking a whole lot better, set for a rebound. And that's what we're seeing down in the numbers here. Is they're basically at a fair value for what they produced this last year. But if they can turn things around and rebound, they'd be looking at something significantly higher than where they stand, almost twice. We'd be looking at a margin of safety around the $13 mark and a fair value around the $15 mark, while it currently sits at 9.5. Free cash flow yield we said was okay. Tangible book value is positive, not really growing. It is shrinking, so that's another red flag. Debt to equity is okay though. It was 0.26, 0.19, 0.19, 0.26. So basically flat, very low. That's fine. That's the yellow. ROE, they are not the best with. We like something around 20, and they've been losing out year over year, going from 18.9, 12.5, 9.1, 5.4. So across the board, we see a story of declines. If they are able to turn this around, then we'd potentially would have something there. But it'd be very risky to think so. It'd be one of those high risk, high reward situations. And that's what I can give you for the stock here. We see assets are on the decline, tangible assets are on the decline. The liabilities are basically flat. Tangible book value is on the decline. Cash flow is inconsistent. Dividends are flat. They do pay like a quarter a year. And the actual price, the lowest price here is the dividend, and the share price is sitting right here. So there is a large cluster around that $15, $16 area. So I would not be surprised if they were able to show some sort of rebound if they were to go up 30% or so to that clustered area of value. So I'm going to have to give this one a hold it's definitely not a buy. There were a lot of red flags. In fact, I'd like to give it a sell, but first quarter showed some potential for a turnaround. It could be one of those high risk, high reward plays. I definitely don't condone it, but there is some potential here. But I want to thank you guys for watching. I know this was a quick little video trying to take a look at this one, and just off the bat, there was so much bad. There wasn't a whole lot to dive into. But please go check out some of the other videos, subscribe so that you can see more, and I will catch you guys next time.